and welcome to the show. Today is September 15th, 2022, and this video is going to talk about how APE shares are supposed to work in the AMC model. Let me start by saying that I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. Okay, so if we go to the AMC website and we look at the investor info area, links will be provided, of course. Here we see this open letter to AMC shareholders from the chairman and CEO, Aron. It's under the APE dividend info. If we click that, we'll see this PDF appearing. And if we look at the PDF, let's just scroll down the PDF. And we'll scroll a little bit more. And we get to this point. Here is the most important thing of all. With the creation of APEs, AMC is deeply and fundamentally strengthening our company. Given the flexibility that APE will give us, we will likely be able to raise money if we need or choose to, which immensely lessens any survival risk as we continue to work through this pandemic to recovery and transformation. Okay? So AMC plans to sell APE shares. They plan to raise money by selling APE shares. That's a given. The CEO has already stated that in his open letter. Okay. All AMC shareholders were given one share of APE for each share of AMC that they have, and in the future, AMC does plan to sell APE shares. Okay. How much can they raise by selling APE shares? Let's start by what their current position is right now. They have about $5.5 billion of debt. Let's just say. Okay. And if they sold 10 million shares of APE at a price of $50 per APE share, they could raise $500 million and reduce their debt by that amount. Okay. As the price of APE goes up, just say 75, they can sell another 10 million, reduce the debt some more to 4.225 billion. As the price goes up, sell some more, right? Reduce the debt, keep going, to the point where they become debt-free. Okay. They could do this by selling about 60 million shares of APE as the price of APE is increasing. Okay. Every $25 that it increases, they sell another 10 million, let's just say, right? So at that point, they've sold 60 million shares of APE and they're debt-free. Not only are they debt-free, they had $965 million cash in the bank initially. They're able to put in an additional $1,250 million of cash into the bank, or $1.25 billion. That means that they will have $2.2 billion cash position in the bank. Cash in the bank. So they would be debt-free. They would have diluted APE shares slightly by a small amount, bringing the total number of APE shares to about 577 million APE shares. So it's not bad. Where do they stand in terms of, how much does that money matter to AMC and APE? Well, let's look at their revenue statement. This is the Q2 2022 earnings statement, and if we look, this is on page 44. It's a very big quarterly report. So it's hard to find. But anyway, let's see. We go to page 44. We see this revenue and cash flow statement. In there, we can zoom in on the revenue section. And let's just look at this point only. Let's look at the total revenues, right? Total revenues are, for Q2 of 2022 is about $1.16 billion. Okay, 1.16 billion. And they spent about 1.18 billion. Okay, that means that they're almost breaking even, right? They're at about $16 million, per quarter loss. Not too bad. But they have a net loss of about 121 million. Why is that? Where is this net loss coming from? It's coming from other expenses, right? What are these other expenses? If we look at the other expenses, we can see that the other expenses is largely a result of debt. We've got interest expense and corporate borrowings that are, making up the bulk of this, $121 million expenses. So this is increasing the burn rate of AMC significantly, okay? But what happens when AMC becomes debt-free? What happens when it has $2.2 billion cash in the bank? We know that burn rate that I mentioned is largely based upon paying debt, and when that debt drops to zero, that burn rate's going to drop down towards zero, okay? They're at near break-even currently during a global pandemic. How do you think they're going to do? How do you think they're going to do once we come out of the pandemic? A major competitor of theirs already went bankrupt, but for AMC, that just means they get a bigger slice of pie. They get a bigger market share now, right? And AMC should become profitable very soon once they become debt-free and have $2.2 billion cash in the bank. Once that happens, the short thesis becomes disproven. Why do we care about the short thesis? Because once that thesis is disproven, shorts no longer have any reason to be short AMC. Zero reason at all. Okay? And at that point, shorts will want to close their positions before positive earnings come in. And with $2.2 billion cash in the bank, with positive earnings, AMC could even start buying back shares at that point. But all of this information is based upon the fact, it's predicated on AMC being able to raise money by selling APE shares at a good price. All of this is predicated on that. But if we look at APE shares, the price of APE is, it was around $5.41 today. The price of APE is down. And, we were looking at the price of APE being $50 or $150, right? Is that just, pie in the sky thinking? Well, the very first day, if we saw, the price of APE was headed upwards, and it was headed upwards dramatically. But there were 10 trading halts, okay, on that very first day. And on the second day, there were 3 trading halts. And that basically prevented the price of APE from going up significantly, right? So let's look at the first 5 days of APE trading and see what happened, right? I made this slide for a previous presentation, but it bears going over. On the very first day, there were 10 trading halts as the price of APE was going up significantly, right? The SEC was locked out of the FINRA computers. There was about 15,000 buys compared to about 3,500 sells at Fidelity, and yet the price went down. How do you explain that? Okay. Now, when the SEC was finally able to resolve the IT issues and get back access to their computers, to their FINRA computers, the price of APE started going up again significantly. And we see that, on that very first day, there's about 123 million shares of volume. On that very first day of trading, a whole bunch of people who were supposed to have APE shares did not receive their APE dividend. So, yeah, that's interesting. Okay, so APE shares were in high demand, limited supply, because people didn't have their dividend yet. They couldn't have sold. A lot of people could not have sold their APE shares. Okay. On the second day, there was 3 trading halts, 104 million shares of volume. A lot of people still did not yet receive their dividends. What's going on here? How can people sell what they don't own, what they don't have? We see that by the third day, right, there's an initial upward movement in price, but then some FUD comes out about there being 700 million APE shares instead of 516 million APE shares. So people are thinking, hey, it's 200 million APE shares that are being, diluted immediately. What's going on? 35 million shares of APE volume. Again, there was a whole bunch of people who still did not yet have their APE dividends yet. They could not have sold. On the fourth day, John Merriweather from Investor Relations at AMC, he countered the FUD and said, no, there's only 516.8 million APE shares that were released. Anything else, God knows where they're coming from, okay? But AMC only released 516.8 million APE shares. And there was 23.4 million shares of volume. People still have not yet received their APE shares. So people are not selling their APE shares. We also know that another rumor started up for APE options, right? And the rumor was that the APE options would come into existence, and that those options would be used for those options would be used as collateral for naked shorting of APE shares, right? To push down the price of APE even more. Okay. Note the price of APE is under $7 at this point in time. Okay. Jeez. Now, on the fifth day, we see that people in Germany and Europe, they haven't received their APE shares. They haven't received their dividend. In fact, they couldn't even buy the APE shares if they wanted to buy them. They were told close only, sell to close only. That's what they were told. And we found that those options rumors, they're put on hold by the Chicago Board of Options Exchange. APE is a preferred share. You can't have options on a preferred share. You can have options on the common stock of AMC, but not options on APE. So that's ludicrous. We see that the volume dropped significantly. It's 13.7 million shares of volume. Okay, that's less than 1/10 the volume of that very first day of trading. Okay, less than 1/10 that volume. It was hard to tell exactly what was going on. There was this, a lot of people suspected tons of naked short selling, but by market makers. But it was hard to tell. But now we have the SEC releasing FTD data, which, if we look, it includes the second half of August 2022, which means we have info on APE shares. I made a video about how to extract data from the SEC website and how to process that. I won't be going over the details of processing that data. Here's but there it is. Links are provided. Here's the upshot, though. On that very first day, there's about 14,500 buy orders for about 3,500 sell orders at Fidelity, right? APE was overwhelmed with buy orders on that very first day, okay? And yet the price went down. We also saw on that very first day there were 10 trading halts, okay? And 3 trading halts on the second day even. But now that the SEC has released FTD data, failure to deliver data, we see that there's tons of fails to deliver that can be attributed to short selling on the very first day. 43.4 million shares failed to deliver because of short selling on that first day. Okay. On the next day, 38.6 million shares failed to deliver. The following day, 24 million shares failed to deliver. That represents 35% of all trading volume on the first day, 37% of all trading volume on the second day, and almost 70% of all trading volume on the third day. Okay? On the fourth day, about 49% of all trading volume was represented by naked shorting of APE shares. Clearly, this naked shorting has a suppressive effect on the price. Okay? Who is naked shorting? We can only guess. Previously I could have said we can only guess, but now it looks like it had to have been market makers because the public was buying. We saw the amount of buys to sells, right? About 14,500 shares compared to 3,500 shares, right? The public bought a hell of a lot more than they sold. Not only that, a lot of people who were supposed to have APE shares didn't have APE shares. The public did not have APE shares. So we know that it was naked shorting. The naked shorting had to have been coming from market makers to supply this huge amount of volume, right? Because people were buying shares and market makers were creating naked shorts on that very first day in order to supply those shares, okay? That clearly had a suppressive impact on the price. So we see, when you've got 70% of your shares being just pure naked shorts, when you've got 49% of your shares on the fourth day being pure naked shorts, when you've got 40% of your shares being pure naked shorts, that clearly is dropping the price of APE. Why does it matter? It matters because of what I said earlier, right? Aron's plan was to sell APE shares, and market makers, by massively naked shorting APE shares, are preventing him from selling APE shares at a high price, which is preventing him from actually paying off his debt and increasing his cash position. So that's what's going on. We now know because the SEC has released their data, right? The failed to deliver data from the SEC now shows up as a percentage of volume of shorts that took place. And they were shorts that could not have been delivered because they did not have those shares. So that was clearly naked shorting for the purpose of suppressing price. And that suppression of price stops Aron from completing his plan to sell APE shares, right? And to raise capital for that. Anyway, that's how APE shares are supposed to work. It's supposed to be used to pay off debt, have a small amount of dilution, and the delivery failures clearly show that market makers are responsible for keeping the price of APE down by naked shorting. I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. It is September 15th, 2022. Goodbye.